Inflation in the last month was 0.4%. So, annualized over a period of 12 months, 0.4 times 12, that would be a rate at 5% per year. So that's where inflation is right now over the course of last month. Now, of course, 1 month is just a blip, and it doesn't mean anything unless it's sustained over the entire period, which hasn't been demonstrated to be happening just yet. However, if you look at the chart, you can see that we've had very high inflation, not just the past month, but over the past 3 months, because there's been a long enough period of time for the stimulus to kick in and actually get into the hands of people, and the initial shock of the immediate pandemic has worn off, so people are no longer scared and saving and pulling back, but their spending patterns are returning to normal, plus the addition of the stimulus. So like early in the pandemic, a deflationary shock would have been the sudden fall in travel and energy prices, but now that that's been worked in and processed in the system, and those prices have bottomed out and if anything are increasing, they're no longer having a downward effect on prices, so the inflationary effects of the stimulus are no longer being canceled out and in fact are being complemented by these rebounding price effects. So of course, after the initial shock of deflation, now we're seeing sustained inflation because of the large amount of money being pumped into the economy and the stimulus. And unlike in the previous recession, the stimulus is actually being pumped into people's pockets directly through stimulus checks and fiscal policy action. So you can see in this graph that in the previous recession, it took a whole 5 years for retail sales to return to their pre-recession peak. But because of the more aggressive fiscal stimulus going to consumers, in this recession, we're back above pre-recession retail spending after only 3 months. Let me see. March, April, June, July, well, 4 months. So it took 5 years to return to pre-recession retail spending in the last recession, but it only took 4 months. That's because of the more aggressive fiscal stimulus going directly to consumers. So because of this, the inflationary environment we're about to enter is going to be much more aggressive than in the previous recession. So anyway, going back to monthly inflation. So over the past 3 months, inflation has been a total of 1.6%. So if you multiply that by 4 to annualize the inflation we've seen over the past quarter period, we get an annual rate of inflation of 6%. Now, yes, that's rebounding off of the deflationary period we've seen previously. So if you go over the entire year, then annualized inflation is still below the 2% norm we've been seeing over the past couple of years. But the conditions that have produced inflation over the past 3 months are going to continue. So this is my prediction. Over the next couple of months, we're not going to see inflation on a monthly basis go any lower than 0.4%. And again, as inflation continues at this level month on month, the reported annual figure of year-over-year inflation is going to slowly rise as the monthly inflation accumulates. And that's my forecast for what's going to continue to happen in the short-term future. You can see that in this graph of core inflation that the inflation that is taking place is not just because of swings in food or energy prices. Those have actually been fairly stable this month, but because of changes in actual core prices. So this month, core inflation was 3.8%. And you have to go all the way back to 1995 before you see a monthly core inflation that's been higher than what we've seen in the past month, except for the month that was just before this. So because conditions are going to be continuing for the next couple of months, the same as they've been for the past 3 months, I'm going to predict that monthly inflation is going to stay at a minimum of 0.4%. And so we're going to see fairly higher inflation for the next couple of months until the headline year-over-year figure increases to match the same annualized rate that the month-to-month inflation we've been seeing, which would be about 4 or 5% if you annualize the figures we've been seeing over the past 3 months. So that's my forecast and what I think is going to happen with inflation. And that's it for the video.